And here's Kevin. Hi. I'm not sure whether this is broadcasting or not. I can let's see. There it is. All right. Hello, Livingston County. I want to welcome Mark Persitz, Carolyn Calhoun, and Kevin Jerkins. There we go. We are going to get started this week talking about everything you need to know for wrapping up your year for the small business and your family. Mark, we want to start us off. I know you're our local CPA here. You're in Milford, right?
I am in Green Oak Township, which is between South Lyon and Brighton.
Got it. All right. Well, perfect. I know you wanted to start us off with some ideas about kind of updating bookkeeping, end of the year strategies.
Well, let's start with the foundation for doing good planning is good bookkeeping. And the best thing you can do to start your tax planning is to update your bookkeeping at least through the end of September or October, so we have a good foundation to estimate what the rest of the year will be and to try and estimate what next year will be. And once we have those estimates for income and expenses, deductible expenses, then we can use that to calculate what your taxes will be and do much more effective tax planning as a result of that.
Okay, so now from a business side, pretty much any of my expenses is a tax deductible expense, right? I mean, or do I need to start separating those things out for you for better bookkeeping?
Well, certainly having better categorization of your expenses in your bookkeeping helps a lot. And not everything is deductible. You know, there's often a misconception just because you have a business, you can run everything in sight through your business, but that's not necessarily true.
You know, I can't write off my pet food or, you know, the overnight for the babysitter?
Sorry, probably not.
All right, Carolyn, how about you? What are some of your big deductions that you try to get lined up for the year?
Well, anything with really for me, I'm working with Mark myself, so he's coaching me through this process as being a first-year business owner myself. So
okay. Perfect.
Right.
Here, I'm going to bounce Kevin in for a second. I want to see where he's at with some of his tax deductions from the real estate side. Mark, so again, as terms of categorization, what's the best type of way that I can, as a business owner, where should I be putting those categories? What are your common ones that you like to see us as business owners come to you prepared with?
Well, I do like to see groupings of accounts. I like to see office expenses and miscellaneous expenses under a category of general overhead. I like to see various types of insurances grouped as one category, taxes grouped as another category, conventional accounting terms used for your account names.
Okay, got it. Kevin, how about you? What are some of your big categories that you always see lined up when you're getting your bookkeeping organized for the end of the year?
Well, for homeowners right now, and Mark would probably confirm this, but for homeowners, people get their winter tax bill, which is due on December 1st. But when they see that tax bill, they get to wait and pay it as late as February, but they don't understand that it's actually due December 1st, but they have till February to pay for it. And if they want to take advantage of that tax deduction, they would have to do that by the end of December. So I think that is really important for people to understand, to get that part into their equation. And with the new tax plan that the government's talking about, there's a possibility that come by the end of next year, we might not even be able to deduct those property taxes. So I would, this year for sure, if you have the ability to pay your taxes before the end of the year, make sure you can do it and get the best tax advantage, because we really don't know what's coming up ahead of us until this thing gets through Congress.
Well, certainly what Congress does is always the wild card. And what the Senate proposes and what the House proposes can wind up going through vast changes. And then if they go to a conference committee, the whole thing can change. And they can bring in new things. They can wipe out things that both houses have agreed to. So it is a wild card. There are a lot of similarities between the House and the Senate versions. And the general rule about what you said about accelerating your property tax deduction as well as if you have Michigan estimates to accelerate or medical estimates, medical payments that you can accelerate. The general rule is that you accelerate deductions, but it's not. And given the tax proposals out there, I would tend to agree with you. Good tax planning would conventionally, which means we don't know about that congressional wild card, is to say when we can estimate what this year is going to be and what next year is going to be, then make some decisions about whether it's more appropriate in an individual's particular case or a company's particular case about whether they should actually accelerate expenses, try to accelerate income, or decelerate income or expenses.
Okay.
And it's all very individual to everybody involved.
Well, sure. Kevin, I'm going to bring Carolyn back in for a second here. And I want to talk a little bit again from that small business side, as you were talking about when do I acquire assets, when do I, put those on the books, but also as Kevin brought up from the personal side, Carolyn, I'm getting ready to wrap up my taxes. If I've refinanced this year, what do I need to make sure that I've got from my mortgage documents to bring into Mark, to bring into my CPA?
Well, you're going to want to have your HUD statement or your final CD that you're going to get everything to bring that in.
All right, and remind us that if we don't know our acronyms right now, what's my HUD statement look like?
It's going to be your closing document.
Okay, perfect. A really long one where it's itemized out on both sides for the seller and the buyer, right?
Correct. Yeah.
Okay, perfect.
It also is going to be, it could also look like the CD is what they call it. Kind of looks like a utility bill.
Oh, okay.
Long.
Got it. So Carolyn and Mark, which of those line items should I be looking for as I'm preparing for my taxes at the end of the year? I know sometimes there's items in there where I've prepaid my real estate taxes or I've prepaid weeks of mortgage interest. Are those things that I should be lining up?
Well, those are decisions that should be made after estimating what the year is going to be.
Okay.
Or as part of estimating what the rest of this year is going to be, and then what next year will be. And with that information, then we can decide, is it better to accelerate or decelerate those expenses? I often get the question from businesses, should I buy this piece of equipment to save money on my taxes? And I think the question is phrased wrong. The question should be, is I'm going to be buying a piece of equipment within the next 3 to 6 months. Now, in that, the assumption there is that you need that piece of equipment. You're not just going to throw money at something to save on taxes. No. Now the appropriate question is, since you're going to buy it anyway because you need it, should I accelerate or decelerate it? And it depends on the type of asset that you're buying. If you're buying something like a computer or a piece of machinery, accelerating it is often advantageous because you can make your depreciation deduction after the year is over.
Okay.
And you have some flexibility into which years it's going to fall in. But if you buy a car which has a different set of depreciation rules, you don't have that same kind of flexibility. If you spend money on certain things like filling up your postage meter, then that's a decision that you can't change after the fact. You're locked into having taken that. So
we're looking at December, and we're trying to, it's coming up November, December. We're saying, hey, maybe I should schedule some time with my CPA now, and then kind of go through that list of, should I prepay my postage? Should I, as Kevin said, should I prepay my income tax or my property taxes? I can come in and bring in my documents from Carolyn's refinance, and we can figure out which of those things we want to take. Would you recommend for the general public, whether it's families or small business, that maybe waiting till April is the wrong time to make your first call to your tax professional?
Absolutely. If you call your tax preparer during April, it's very likely that your return is going to be on extension anyway.
Well, sure, absolutely.
And then it's harder to know if you should be making a payment with that extension or not. And nobody likes to have their return filed on extension or late, or have penalties because they didn't know how much they should pay with their estimate. But if you do your tax planning in October, November, December, and you are going to owe even after you accelerate payments, it's good to have that extra time so that you can start accumulating cash, or you can make extra estimates that are timely to avoid penalties and interest.
Excellent. Now, Carolyn, I wanted to loop you in over a second. If we're looking from a situation of that timing for the mortgage, what do I need to think about as I'm wrapping up my year? Is there something that I should be looking at and say, hey, did I have that PMI stuff? What was that about? Do I need to look at consolidation maybe for my business? Do I roll some money out of the house and take care of some business debt? Where should I be factoring things in for the end of the year?
Well, it's a good idea to kind of review everything at the end of the year and kind of see where you're at. So can we get rid of PMI? Am I in an ARM that's coming due? Those are the things that you want to kind of look at. Do you want to consolidate your debt? Kind of start the new year off fresh.
Okay, so kind of a preemptive New Year's resolution. Where are my numbers? How does it look now? Just for a refresher, PMI is the mortgage insurance. So when I bought my house, I didn't put 20% down, but maybe now I've built this equity up. And actually, Kevin, I'm gonna bring Kevin back in here for a second. Give me a sec. So when we're looking at that, how do I get rid of PMI for now? It used to just be I could get rid of it because they could look over the mortgage, but is that the case anymore?
No, typically it's not. You're going to want to go through the refinance process,
Okay.
depending on setup with your current mortgage holder. So depending on how long you've been in the property, sometimes we can waive the appraisal and it's not needed for the process, but sometimes we go through the whole process.
Got it. Now I know Kevin and we've been chatting about PMI previously, but Kevin, you had also talked about some off-season ideas. Something brought in about, it's getting to be the end of the year. It's going to be snowy and cold and horrible out, so I probably shouldn't list my house. But you were sharing with me some ideas that maybe that's not the case.
Right. With inventory being down right now and trying to find homes for buyers, I find that, like I've got a relocation buyer right now looking in the 350, 450 price range. Inventory's really low. And with inventory being low in that price range, people might be able to get a higher dollar for their home if they were to put it on the market in the winter. And I think there's a fallacy out there. Oh, I'm going to wait till spring. Well, why do you want to wait till spring when inventory tends to go up? Your competition gets a little bit stronger, and I believe sellers can get more money for their home in the wintertime than just about any other time of the year because of lack of inventory. Homes sell every day. So it's not like a home isn't going to sell. So if you do get your home competitively priced for the market and put it on this time of year and you really do want to move, there are buyers for your house. And I know a lot of people don't like to list necessarily right around Christmas with a lot of people coming into town. That's fine. So, make it your New Year's resolution that you're going to put your house in the market the first or second week of January, and be ready, and you're going to get ahead of the swing. So, So
that's almost like bucking the conventional wisdom, because I know I've been told over and over, and I know I've heard for decades that nobody lists in the winter. It's wait till spring. I think we hear that a lot in the financial areas of, I'm going to do that after this next thing happens, or I'm going to wait till after the holidays, or I'm going to wait until after I file my taxes with Mark, or I'm going to, I want to put this thing off. And what you're saying is, if the opportunity's there, just grab it, make it happen, and maybe you'll be the only house that's listing for your relocation specialist or your family that needs to make a change, mid-year. Mark, is there anything that we need to look at from the tax side if we want to neaten things up before we list or before we sell a house?
Well, certainly you want to take into consideration whether the gain on your house is going to be taxable. For the vast majority of people, it's not going to be. The rule being that if you've lived in your house for at least 2 of the last 5 years and your gain for a married couple is less than $500,000, you're not going to have a gain on your house.
Right. Now, with that timing, so I've lived in the house 2 of the last 5 years. Do I have to wait 5 years before that clock starts over? Could I, live in a house for 2 years, sell it, not worry about the taxes, live in the next house for 2 years? So now I've still lived in that one for 2 out of the 5 years, but I didn't necessarily give a 5-year window. Does that matter, or is it just 2 years?
Just 2 years.
Okay, great. All right. Well, wonderful. So I think we've got a lot of different ideas. Let's send our audience with a little bit of takeaway. Anything that you want to make sure that people are hearing from us as they're, getting ready to wrap up the end of the year before Thanksgiving, and what they need to be doing?
I think that it's very important to understand what tax brackets are, and that's a whole topic all by itself for another occasion. But especially if you're self-employed, that people have a tendency to underestimate how much money they're going to need to set aside and make estimates for. And if you're having a really good year and you have not set aside that extra money that you need to, you could find yourself in a world of hurt.
Right. So even though I'm having a great year, all of a sudden now I'm in a financial problem because, I was doing my estimated from last year, but I made 20% more and I forgot to put 20% more into my estimated. That's great advice.
That's
I
correct.
Really like that.
Conversely, if you're not having as good a year, you might not have to make that fourth quarter estimate, and it'll save you on cash flow in a time that you need it.
Right. That might be a great saving. Here's my, Christmas money because I don't have to send as much money to the IRS. That's fabulous. Kevin, anything you want to send people home with for the week?
Well, just going back to my previous statement that wintertime is not necessarily a bad time to sell your home, but also wintertime can also be the time where you start preparing your home for sale too, where you start to do your decluttering, maybe get your painters that, in there and get some painting done. And so I just think that that's a good thing to think about coming into the end of the year. If you're looking at selling, maybe within the next year.
Sure, and even if you're not looking at selling, I know we had a whole conversation about just stuff, right? End of the year is a great time to start that declutter process. And if maybe making it about a financial thing is the reason you need to light that fire for you, that's great advice. So here we are. We're going to wrap this up. We'd love to hear from you guys. Tell us what you want us to talk about next week, and we will join you again next Tuesday at noon. Thanks so much, everyone. Thanks for joining us. Have a great day.
Thank you.
You.
Have a good day.